Let's look at this graph that is a Case-Shiller Housing Index that's actually adjusted for inflation. So it's showing housing values above and beyond what the inflation is of the time. Now this graph does run from 1880 to 2020. And we can see the Great Depression there, which is why everybody was depressed. Housing values dropped significantly. At any rate, we can see that housing is rather consistent trend line over time there. Let's just say it's maybe 1% or 2 better than inflation over time. Then we get to the anomalies. 2007 to 2012. That was the Great Recession, or the housing crash of recent memory. And then here we are today in 2022. The same formula, index housing adjusted for inflation, shows that we've looks like we're repeating our little trend line there of potential problems. Now let's take a look at what caused 07. The run up to 07, we had what I call funny money. We had adjustable rate mortgages, and that had loose lending to go with it. So I actually gave a 3-hour seminar explaining exactly what happened, but funny money was is the short executive summary to the cause of that housing inflationary spiral. Now let's take a look at what has happened in maybe the last 5 years, or certainly since 2012. We're looking at artificially low interest rates held down by the Federal Reserve to recover from the Great Recession and improve unemployment rates and such. We have low inventory, partly because the Great Recession caused 3/4 of the builders to fold up shop, and developers going broke, and a lot of older craftsmen retiring and leaving the market, leaving the workplace. So we have low inventory, and we have pent-up demand. We've had the millennials are finally of age, and they finally have jobs, and they want to buy housing, and it's a very big group of folks who need housing at this point in time. So those are a little bit more solid reasoning for the dramatic increase in home values and home prices. The trouble is, what happens when interest rates go up? And low inventory takes a very long time to turn around, and pent-up demand continues. Judging by the graph, it's likely to be a correction in our near future, although personally I don't think it'll be as dramatic of a correction as we saw 10 years ago. It's my opinion. March 2022. You're entitled to your opinion. This is just the facts.